Rather here.
Okay.
We try to sit in the order of the banner.
Perfect. Yes.
So we will have ourselves a little panel discussion about cryptocurrencies. What else? Since right now it is a very exciting time to be in crypto. We go through these cycles every couple of years, and we are in a bear market now, and we will unpack trends and also opportunities. We will focus on opportunities. I will kick it off with an introduction. My name is Emi Lorincz. I have the honor to be the president of the Crypto Valley Association. Please raise your hand if you know the CVA or heard of it. Okay, it's quite a lot of hands. Thank you. If not, please check out the website and see how we bring adoption forward. And with my full-time role, I'm the BD director of Ledger Enterprise, which is the B2B arm of Ledger, the security company. I would invite my panelists to kindly introduce yourself and say a few words about your company.
Yes, may I start? So my name is Nicola Plain. I'm the CEO of Aktionariat. What Aktionariat does is the 99% of the AGs that are not listed on a stock exchange, we make them tradable with a simple tool set and a legal framework, so you can put it on your website and have your shares traded directly on your website. That's what we do.
Thank you so much. Luzius.
So I'm Luzius Meisser. I'm the chairman of Bitcoin Suisse, among other roles that I have. And at Bitcoin Suisse, we built a bridge between traditional finance and decentralized finance. So we are a gateway to crypto for many investors that do not want to get their hands dirty with cryptographic keys and ledger devices. And here we have been pioneers since 2013. We've been the first to be regulated with a self-regulatory organization. We've been the first, in many regards, one of the later achievements is staking, where we were on day one able to do staking of Ether for our clients. And this remains a good business until now. So these are basically a gateway to crypto is the role we have.
Thanks so much. Philipp?
Hello everyone, my name is Philipp Cottier. I'm one of the founders of L1 Digital. L1D is a asset manager based in Zurich. We're fully regulated by FINMA. We're focusing only on crypto and blockchain investments. We run about $500 million in total, of which about $300 million in a liquid fund, Liechtenstein open-ended fund, and the other $200 million on the VC side, where we invest in blockchain businesses.
Thanks so much. I'm interested to learn a bit about what is the mission of Aktionariat and how are you trying to make self-custody more easy? Because when we prepped for this call, we agreed that, yeah, self-custody is not an easy thing to do, and if you're not tech savvy, maybe you have a few burdens and challenges along really owning your assets.
Yes, so the vision and mission of Aktionariat is to make every company investable, simply and not expensive. That is the goal, and that is also what we are offering right now. So every company has the possibility to create its own share market for its own shares, and thereby every single investor, retail investor, has the possibility to get exposure to private equity, which before was quite cumbersome for retail investors to get in. So that is the mission, and then of course we are working in the DeFi space, and that also means that our investors usually have a self-custody wallet that they need to take care of. They need to take care of their private keys, and yeah, so this is not for everyone. There are quite some few investors that don't want to take on this responsibility, and then there is the question, what is the solution for that? So one thing is to make self-custody easier. There are different options, Ledger, of course, and then we have these mobile wallets, but since they're always connected or almost always connected to the internet, it bears some risks. And then there are other hardware wallet solutions which make it easier to store the assets, to use these hardware wallets. There are also different type of difficulties. And yeah, one way out is to offer a very simple solution as a hardware wallet. So the investor still has the responsibility to store the seed phrase and so on. And the other option, of course, is to have a financial intermediary, for example, a bank, to store these assets. So I think also in the future of DeFi, banks can play an important role because not everyone wants to take on the responsibility of handling the assets themselves.
Yeah, my chief experience officer at Ledger, he always jokes that the Nano is a B2G product. It's not a B2C, so but it's a B2G, so for geeks. The G is for geeks. So it's yeah. I would love to dive a bit into the allocation, Philipp, at L1 Digital, because when we prepared, you said that Bitcoin is the grandma of cryptocurrencies, and you only allocate 3% in general or an average to Bitcoin, but 97% of the portfolio is rather other instruments. Can you share a bit more? Why is that, and what's your take on that?
Yeah, I say grandmother because Bitcoin is quite old, 13 years, which in our industry is 13 light years, so it's super old. It's old technology in a way, but it's a very cool project, so we like it a lot, obviously. Having said that, however, if you look at the whole blockchain space, there's about 30,000 projects, and many of these are as exciting or will be as disruptive or even more disruptive than Bitcoin. And we're here to invest in the whole space, in the next digital revolution. So from layer 1s to layer 2s, all the way to DeFi and decentralized apps, to the creative space, metaverse, gaming, DAOs, etc. So to us, Bitcoin is one super exciting project, but overall we invested more than 100 tokens and blockchain businesses, and many of them are extremely exciting and will be super disruptive in the sort of next 10 years, let's say.
Thanks so much. And Luzius, with your Bitcoin Bitcoin Swiss hat, you're also involved with the Bitcoin Association Switzerland, but let's focus on Bitcoin Swiss. So you guys have been always pioneering crypto finance since 2013, and DeFi and offering access to DeFi has been always one of the most important goals. How are you keeping up with such an influx of exciting DeFi projects?
It's not easy to keep up, so we have quite a wide palette of available tokens. I think it's about 80, and this is down from 150 or so. So in the past year, we took an effort to clean a little and to sunset the tokens that were not so popular anymore. So it's actually difficult to find the right balance. So it's a challenge. So on the one hand, there's lots of client requests. So this is one thing that we do especially well, I would say. We have a high-tech, high-touch approach. So if a large client comes and says, I'd like to do staking in that exotic token, we can make it happen because we are not too large to ignore small client requests, and we are not too small do not have the capacity to implement something like that. So we had quite a zoo of tokens. We reduced that a little, and we were at the forefront of staking. We didn't do much with NFTs, and we also never offered tokens like Terra Luna, which I'm quite happy about.
By the way, is everyone hearing us well? Because I do hear a bit of like the mic has an after sound when you and I speak, but maybe it's just me. I will invite also the audience to think of a question. Maybe there is someone who has a burning question. You have the possibility to ask it after my next question, which is to all three of you that you mostly cater to institutions. What these institutions want? You cater to different type of institutions. I feel like at Bitcoin Swiss and L1 Digital there is more overlap because you cater mostly for SMEs and startups. So what is their number 1, 2 demand? Like what is the most important for them?
I mean, for us, since this year at least, we see that more and more SMEs and also startups are very interested in tokenizing their shares, and that's what we do. That's something that I didn't mention before because I assumed everyone knows that we are doing it on the blockchain. But yeah, we see a highly increasing demand in tokenization of shares of SMEs and also making them tradable. So because just tokenizing for the sake of it doesn't make too much sense. So you need to do something with these tokenized shares, and the beauty of tokenized shares basically lays in the transferability, which is much easier than with conventional shares. So yeah, we see a huge increase in demand when it comes to tokenization and then making the shares tradable. That's the main goal, besides fundraising, of course, which is always nice, especially for startups, of course.
Thanks so much. You guys have anything to add?
70% of our investors are institutional. So we have 50 to 60 family offices. We have some independent wealth managers. We have 5 pension funds, an insurance company, etc. Maybe one more comment. We have very few banks. So the banks seem to be the last movers in this space, which is counterintuitive. Anyways, coming back to what these investors want, they are basically looking for a diversified exposure to the whole blockchain space. For them, it's a tech investment in the next digital revolution. That would be quite big, could be as big as the last one. Web3 is going to be a huge thing. And they want diversified exposure that is sort of managed in an institutional manner.
Thank you very much.
Yes, one interesting thing is that the bridge goes 2 ways. So I said we are building a gateway to crypto, but it's also the gateway to traditional finance, because some of our clients, they are crypto companies, they have a lot of tokens, and they need to move their assets into traditional finance to pay salaries, to pay rent, and so on. So there's both sides. There's not only those that want to have exposure to crypto and want to move into crypto, there's also those who want to move out of crypto. And this is the bridge function we fulfill.
I will just chime in with my Ledger Enterprise hat. What I see that once you have a couple of millions in crypto, having a treasury tool for your assets to have a business logic, an easily configurable governance layer, and to be able to whitelist addresses, it's very crucial. And also to be able to stake directly out of your treasury. That has been paramount as the volume and the value of assets increases. Perfect. Is there someone in the audience who wants to ask a question now? Please.
The question is for Nicola. We've heard earlier from the CEO of Alpian and which I found this is really a great way to position it on. I don't want to provide a platform for everyone to trade crypto. I want to first explain to them the risk, why we're doing it before providing it. And I feel you providing as well access to the public to trade early stage companies and startup, which has a lot of risk. Can you share with us what are you doing on the educational process to make sure this transition is valuable and is not impacted in an environment where the markets are down and Mr. Everyone could be hurt? Thank you.
Great question. In our business, most of the things come with some education that needs to be done. Because everything is new and most of the people don't know what it is. One side is the technical side, the other side is retail investors having a possibility to get exposure to private equity. Maybe one thing I wanted to add, it's not only early stage companies that we have on our platform, we also have more established SMEs that I think the oldest has been around more than 40 years. So I wouldn't consider this to be an early stage company. Nevertheless, of course, you have to educate a bit on what it is and that it comes with high risk and hopefully also high return chances. And to be honest, we are not doing a lot in that regard currently. We have a section on our website where we explain what private equity is, what venture capital is, that it comes with some risks. But until now, that's about it. But it's a very good input. Maybe we should also start educating on that side and not only on the technical side. So thanks for the question.
Thank you very much. I think there were a few other questions. We will. Okay, Thomas, let's take one question from you, and then we move on. And at the end, there will be more room for questions.
I have a question to Philipp Cottier. You look at different projects, different cryptocurrencies. Can you share like 3 rules of thumb on how you assess them, such that you think it's a good investment? Because sometimes it's quite tricky to get close to the teams behind these many projects. And even if you have these white papers and stuff, you don't always know the full story. So how do you really like assess it such that you know it's a good balance between risk and reward, and maybe any red flags that you see? Could you share any rules of thumbs for investors?
Yeah, I mean, I would require a long answer, but it really depends if you're talking token SAFTs or a VC, because it's a different angle. And then if we just start with tokens, it depends a lot what kind of project is it. So is it a layer 1? You know, is it a smart contract platform that is a sort of alternative to Ethereum? So you will look at speed, technology, etc. If it's a decentralized application, you have to think in terms of total addressable market size. Or a total value locked on top of the protocol, or developer activities, for instance, something that we look at a lot, right? Quality of the team, technology, how can they defend? I mean, there's so many things. And on the VC side, we're investing not really in early stage, it's more Series A. So there often you already have a functioning revenue model. They have some products that you can look at team, etc. So I mean, it will require a long answer, but we're a very international team. So some of us here, we have some in the US, very experienced people, been doing this for since 2015, etc. So it's a very complex space.
Thanks so much. So we did talk about what institutions want, but what are the #1 crypto adoption breaks? Like for instance, the event, what happened with Celsius, that they don't allow any more withdrawal or trading between their clients. Is that something what sets us back a big time? How do you see the adoption breaks? If each of you could say a few words to this.
I think this is a great example of creative destruction, because it's what I don't like about the traditional financial system is that everything is secured, and then everything is very slow, and there's no innovation anymore. And in crypto and in DeFi, we see a lot. It goes up very steeply and goes down very steeply again in a fast pace. And this means that there's a lot of innovation that can happen, and it's actually a much purer capitalism that's much more free, where things can evolve quicker, and there's no innovation without risk. So I think overall, of course, it's never good when something crashes or something goes down, but it's always an opportunity for new things to grow again.
And also, let's not forget that what's going on now in traditional markets, it enjoys a high correlation. Crypto is now correlated to an extreme level, and we like to say that the bigger turmoil is happening in the world. Bitcoin, for instance, is a good hedge in a case like that, but we don't see that now. We see the opposite. So it will be interesting to see when the decoupling happens, if it happens anytime soon. What other breaks do you see, Philipp, Nicola?
I can maybe mention sort of how we see crypto adoption, because it's the right question to ask, right? If you have super technology but no one uses this, then what's the point? So we had it goes in waves. First wave was Bitcoin adoption by quite a few people. If you look at number of wallets, it's in the tens of millions, so there's a lot of people using it. However, that's not enough. When we started, we sort of expected the next big wave to come in DeFi and stablecoins. It has not happened. Today, you look at who uses DeFi, it's mostly hedge funds, institutional investors, crypto natives, but you don't see the average person out there doing DeFi, or stablecoins they're starting to, but not DeFi yet. However, where user adoption is happening, mass user adoption even, is in the whole creative space. So anything related to NFTs around music, gaming, collectibles is a big one. Metaverse, social tokens, etc. So there you see real adoption happening, and we continue that. We expect this to continue. It's the younger generation typically, so it's a generational thing. Beyond that, I think one of the biggest impediments so far to full user adoption of cryptos has been user interfaces and user experiences. They're awful. I mean, it's really awful experience. And this is because the industry has been built by techies, by crypto natives, you know? And unless you're crypto native or have a super high IT affinity, I mean, the experience is not good enough. And this has shied a lot of people away from it. So I think the next wave will happen over the next 2 to 3 years when companies will build more real positive user experiences, user interfaces, etc., to make it much more easy to use and more fun to use.
I'm curious that in the audience, who did ever go through the joy or the pain of setting up a hardware wallet? I'm also raising my hand. Oh, quite a lot. Okay, thank you for sharing. Anything to add?
Yeah, I think Philipp made a very good point with usability. Of course, this is also something that we need to tackle. Of course, we don't give you exposure to cryptocurrencies. We give you exposure to SMEs, so it's most of the times easier to understand what they do for normal people like us. Instead of when you try to invest in a DeFi protocol, usually you don't understand what they're doing and if it's something or not. So that's easier on our side. You have a company, you can test their product, you can test their services. So it's easier to understand and therefore also the adoption from retail investor, I think, is way easier than if you have technical projects. But then still, we are still in the DeFi space, and as Philipp said, it's about usability, which is not there yet where it should be. And this is one of our main challenges, to do everything from our side to make it easy to use so everyone can use it and understands what she is doing, including taking over the responsibility of your own funds if you use self-custody wallet, of course.
Yeah, this is the main differentiator between Web 2 and Web 3, that when you interact, you cannot just read and write, but you can also own. So the aspect of ownership is what really makes a difference. Luzius, when we chatted to prepare for this panel, you shared with me that in your view, it's so important what the public thinks in general about crypto. And right now, we are in a bear market. Like, how can we make sure that the perception is going to stay good or is improving?
So there's a big risk for crypto, and it's connected to the self-custody, and that you can actually own something. It enables disintermediation. It enables to eliminate all the intermediaries that normally take a cut or make things complicated. It enables a free internet of finance. But the regulators don't like this because they rely on the intermediators to check your passport, to figure out who you are, to freeze your funds if they don't like you, and so on. So as public perception of crypto is negative, so when FINMA receives letters from people saying, why don't you ban Bitcoin? I've been victimized by ransomware. That creates public pressure to do something against crypto very generally. And this pressure manifests itself in many ways that in the end could lead to a slowdown of innovation. And there's, for example, OECD has created some proposals for tax transparency, where you would, if Bitcoin Suisse, we offer some payment services. So if you run a bakery, you can buy bread and pay with Bitcoin. And the OECD proposal says, whoever buys some bread there needs to be identified by Bitcoin Suisse because they are the payment provider. But that's of course completely unrealistic. It destroys disintermediation because it requires us to onboard every potential client. So there's a huge risk that regulation destroys a large part of the potential value, and this risk can be averted if we can create good public perception, and that we can create by delivering actual value. So we need to have projects like Aktionariat that deliver some tangible value and then are not just the next Terra Luna where they create a big bubble that bursts in the end.
Thanks so much for unpacking that a bit. I have 2 more questions, and then we I believe, have time to take one more question from the audience. So there are some crypto curious in the audience who don't have, never touched or never interacted with any type of cryptocurrency. What's your advice? Like, what's the best first step to dive into Web3, dive into digital assets?
If you just want to have crypto exposure, I would maybe buy an ETF, so you have a bit diversified exposure. Yeah, other than that, of course, buy tokenized shares from portfolio companies of Aktionariat.
Not financial advice, but...
I think this is a very, very complex space that is moving super fast. It's 24/7. Any innovation is immediately published on GitHub, Reddit, gets copied, so it's exponential innovation, etc. It's terribly difficult to keep up with the space, even for us professionals who do this for a living. And so it's not easy to access, but my recommendation would be read a lot. It's not just books, but subscribe to news lists, subscribe to Discord channels, Telegram channels, and whatnot. And secondly, go and set up your own wallet, whether it's MetaMask or Ledger, or maybe use one of the professional providers to offer you an account or access. But start using it with small amounts, see how it works, play around, etc.
My recommendation is to be a member of the CVA, because we have a very symbolic membership fee for a year, 100 Swiss francs, and you can be part of a community who's curious, who wants to innovate, who brings the entrepreneurship, the good vibes, the fun into industries which have not been revolutionized for a long time. Now, my last question, and then the audience question. So we are in the beginning of a bear market. Yeah, I said that a couple of times, but where do you put your efforts and energy in times like this?
Make our product better. We are not extremely affected from the bear market, I have to say, but still, I think that's common sense in the DeFi space, at least, that if you're in a bear market, work on your product. So when the next bull market comes, your product is even better than before. And that's also what we are doing, even though we are not affected by declining prices.
Thank you.
So I think there's always an opportunity to also shine in a crisis. And I just approved 2 hours ago, a press release is going out where we say, we announce a new investor, and where we say everything is running fine. We have no problems with executing client orders and so on. So it's also, for those who did their homework, it's an opportunity.
Never waste a good crisis.
Yeah, same here. I mean, since I started in 2015, this must have been the 5th cycle or so. And the industry moves in big swings. On average, the trend is up, but obviously, currently we're in a downward swing now. When it goes up, it's usually very hectic. When it goes down, like now it quiets down a little bit. So a lot of us actually like this, because you can go back to work. You put your sleeves back, put your head down, and work on your project, get actual work done. So there's a lot of building happening, and a lot of exciting projects. And we see positively. I mean, technology is really developing. We have long-term investors. We have a lot of cash deploy on the VC side, on the liquid side. This is a great opportunity. Valuations are low. There's a lot of exciting projects out there that you can invest into, and it is transforming into a buyer's market. It's very different from 6 months ago when it was a seller's market, and you almost had to beg to get into projects, and now you get them at very decent valuation. So to us, it's a great environment. We're hiring, we're building for the long term.
I hear a lot of optimism and positivism here, so that's great. We have time for one question. Who is... Please, thank you so much.
Yes, maybe 2 questions. Let's say one, maybe for Philipp. You mentioned about the grandma, Bitcoin. In a portfolio that you manage, which is at least on the token side, what is benchmark? Is it absolute return or is grandma the return? The benchmark, and then basically is to try to beat grandma?
We use a company in San Francisco called Bitwise. They have different indices. One is the Bitwise 10, which is sort of a large cap index, and then we use the Bitwise 20, which is the next 20, now 11 to 30. So it's that's more like an altcoin index or mid-cap index. We use these as a benchmark, but there's a lot of other benchmarks out there. Obviously, you could use Bitcoin, but there's a lot of projects that have nothing to do with Bitcoin because they're doing very different things. So we would prefer broader benchmarks.
There was another question, yeah.
Yes, sorry, thanks. And different questions. You have now institutional investors coming. ESG is a big theme now in the, not crypto, but in the world investing. What about the CO2 footprint of certain cryptos with proof of work? Is it a big issue raised by institutionals?
Yes, the bigger the institution, the more they care about this. And a few weeks ago, we launched together with Helvetech an ETP that's traded at 6, where you can get a Bitcoin exposure, and at the same time, part of that is compensated by buying CO2 certificates. So, but generally, of course, ESG is not as a hot topic in crypto as it is elsewhere.
I actually slightly disagree. Sorry for that. Let me explain. So yeah, Bitcoin now, CO2, it's not great. It uses half of the energy of extracting gold, for instance. You know, so it's a little bit cleaner than gold, but still, we all agree it's not great. Most of the more modern protocols and projects, however, have moved away from proof of work to proof of stake, including the merge, Ethereum 2 and all that. So I think this will mostly resolve itself. So when talking about the ESG, you know, the E, Bitcoin no, all the rest, okay. If you have a decentralized bank, it will use way less electricity than a real physical bank, for instance. So it might actually be cleaner. On the S side, the social side, I mean, it's huge, right? This is about diversity, it's about anyone can participate, it's about financial inclusion, it's about inclusion of everyone. You're an artist in Zimbabwe, you don't need an expensive gallery in New York anymore to sell your piece of art, etc. And then on the G side, this is the most important aspect of ESG. I mean, this is a bottom-up, grassroots, democratization, decentralization of the world. You know, a lot of these young participants in the industry no longer want to be ruled by big companies or governments or whatever. They want to live in communities, build cool projects. So it's about decentralization, democratization, where everyone has a vote, proof of stake, everyone can vote, participate, etc. So the ESG is actually big and very positive in my humble opinion.
Thank you so much for the questions. I invite you all to put your hands together for this gorgeous panel.